Hey, what's going on, you guys? It's Marco. So we're gonna talk about something that's actually really concerning. According to Zillow, over 78% of eligible homeowners never took advantage of the ridiculously low interest rates in the mortgage industry back in 2020. So back in 2020, the Federal Reserve decided to start buying billions and billions of dollars of mortgage-backed securities and treasury bonds to keep interest rates as low as possible. Now, they're still buying billions and billions of dollars every single month, and that has not changed. It has not stopped ever since. Obviously, with that, basically interest rates dropped to the lowest levels in history, and that fueled a demand in the real estate market because now home buyers are rushing to get mortgages with very low interest rates, while at the same time, homeowners are looking to get into the lowest rates possible in order to either drop the monthly payment, pay off their homes faster, or borrow against their equity. Now, if you're a homeowner, typically your mortgage payment is going to be the biggest expense coming out of your pocket. And if it's not, your mortgage loan amount is typically going to be the biggest loan that you have on your name. So having a low interest rate makes sense on a personal finance level. Now, if you're part of the 78% of the people that has not taken advantage of the low interest rates, I'm going to give you 2 reasons why you should be thinking about doing it right now in July 2021. And if you're part of the people that still has not liked this video, please make sure that you do for the YouTube algorithm. It helps out a lot, guys. Thank you so much. And now let's go ahead and get started. All right, so a couple of things just happened this past week. Now, the first one is that both Fannie Mae and Freddie Mac have decided to cancel what they call the adverse market fee. And this adverse market fee was actually a fee that was imposed by both Fannie Mae and Freddie Mac back in December of last year in 2020 for homeowners that were looking into refinancing their homes. Now, personally, I think that was a bull fee. But basically, they dressed it as a fee that kind of sort of offset some of the risks of people, refinancing their mortgages, because back in 2020, there was just a lot of people that were refinancing their homes. So this fee obviously got passed on to the lender, and mortgage lenders and banks are not in the business of taking fees from somebody else. So instead, that fee was passed on ultimately to the consumer. Now, most consumers that were refinancing their homes never really knew that they were paying an adverse fee. By the way, this fee was 0.5%. So just if you do the math on a $300,000 loan, 0.5% is $1,500. So this $1,500 were getting passed on to the actual consumer. Now, consumers just didn't know that they were paying an additional fee. At least most consumers didn't. The lenders and the banks, what they decided to do was just to increase the interest rates for those people that were actually looking to refinance. So it happened a lot of times where if somebody was refinancing and if that person had a similar FICO and a similar equity position versus somebody that was buying a home, normally the person buying the home was able to obtain a lower interest rate than the actual person that was refinancing. Now, the second biggest thing that's happened this past week is that actual mortgage interest rates have dropped. And the biggest reason why is because investors worldwide are a little bit panicky about the economy getting better, especially with the Delta variant of the COVID virus. It has been affecting a lot of countries worldwide, and investors are a little bit spooky. So they're taking money from the equities markets, from the stock market, and moving that money into safer securities such as treasury bonds, mortgage-backed securities, and so on. When investors take money from the equity market to put it into the treasury markets and the mortgage-backed securities, the price of these bonds increase, but the yield decreases. So as a result, mortgage interest rates tend to drop as well. Now, on top of it, there's been a little bit of a slowdown in the mortgage industry and the real estate market because there are still a lot of buyers out there, but there are still very few sellers. And a lot of these home buyers have been trying to buy homes for months now, but they can't lock anything in. And so a lot of buyers are just saying, screw it. I'm just not going to go and buy anything else. I'm tired of getting outbid by cash buyers or by buyers offering 5, 10, 20% over ask price, or even $1 million over ask price. So a lot of home buyers right now are just pretty much exiting the market. So actual mortgage demand has decreased over the past couple of weeks. And just to give you some context, mortgage interest rates were sitting somewhere around 3.275 on a 30-year loan, while now in July, these mortgage rates have actually dropped to somewhere around 3.02%, which basically signifies a 0.25% interest savings, a 0.25% drop in the interest rate. So once again, if you're part of the 78% of the population that still has not refinanced and you're still paying a higher interest rate on your mortgage, you're paying private mortgage insurance, that PMI that nobody ever wants to have. You have an FHA loan. Your property value probably already has gone up a lot since you bought your home. So guys, always just try to have the best mortgage available for you. If you don't know if you're in a good position right now, it really doesn't hurt. Just talk to a mortgage lender, talk to a banker, talk to a friend, and see, compare if you are actually losing out because you are still having a high interest rate on the mortgage. And that's basically it, guys. Thank you so much for watching. If you like the video, make sure that you pound that like button and drop a comment box below. Let me know if you're refinancing your home, you're thinking about refinancing, you have questions about refinancing, and I will see you guys in the next video. Thank you so much for watching.